Ladies and gentlemen of the crypto space, we're live on a Wednesday, June 1st, basically summertime, 11:31 a.m. I haven't seen you guys since Friday. A lot has been going on. Markets have been still in a low, and I see very interesting macro indicators that suggest maybe things are calming down with regard to depreciative pressures. In macro land, we look for correlation, inverse correlation, and the truth is correlation holds until it becomes inversely correlated. And there's no real consistency to the relationship between directionality. As I said, stuff is correlated until it's inversely correlated. So this shit'll drive you nuts as you try and dig into it. To try and assess the direction of various markets. We look for modeling, and what I like to think is quite likely the case, the capital flow into and out of the crypto space is most certainly modelable like an emerging market. So we could easily look to stablecoin issuance or redemption to see if capital is flowing in or capital is flowing out. But that corresponds to broad liquidity in the space. If there's more liquidity, it's going to probably chase assets. But then there's other relationships that help give us confidence, suggesting the market will head in a particular direction. Obviously, the favorable direction is appreciation, unless you're on the derivatives market, the perpetuals, and you're shorting the shit out of this stuff. But that's something that doesn't particularly catch my fancy, so I don't talk to it to a great extent. I prefer the DeFi space, albeit there is a variety of ways to short things in the DeFi space. I'm more of just a spot type of person. When it comes to a capital gains play, not something I find much of a fancy in of late, but obviously the history of our stream, we did a variety of capital gains plays over the years. So it doesn't discount. I cannot completely discount the potential for me to have interest in something capital gains related. I very much inclined to shy away from that kind of behavior and be a more passive type of person, focusing on the structure of the portfolio and allowing it to have a very long-term time horizon and produce revenue in perpetuity. So I like what I see in a bit of a correlation or an observation between the crypto markets and the dollar chart, which leads me to potentially start thinking about maybe a capital gains play. I take cash and I expand my cash position. Or maybe I take on some additional long term assets that are obviously cash flow centric, which is something guys, we focus on that stuff on this channel. So let's take a look at the main screen. We'll take a look at the dollar chart and see what I've been looking at pretty much all morning. The oscillators don't catch my fancy too much, particularly on the weekly. It's pretty much all over the place, and it's just within a heck of a range, except for back in, 87? When we had RSI completely fall off a cliff. MACD fall off a cliff as well as RSI. We're nowhere near that, obviously. This is bullish territory. But look, it's been range bound for for the past 7 years. And crypto, so here's one observation. I wouldn't consider the crypto markets prior to 15 much much in the context of like a bullish and bearish market. What do we have? We have Bitcoin, and that was pretty much it. And we had very early adoption, very early markets, Mount Gox type era. And that wasn't really a market. A market consists of an asset class, not a single asset unto itself. So what has emerged overwhelmingly is an entire market of markets, an emerging market of emerging markets, as I talk about. And that really started in these two purple boxes. So clearly, our most previous cycle, which ended towards the end of 2018 and started winding down with regard to upward breadth, uh, very consistent with the dollar's directionality shift. So it was a market because it was all ICOs. That's everything in the last cycle, and obviously it was complete vaporware, of which we have much vaporware in the most previous market cycle, which came to a conclusion in June of 21 and had its last breath to the upside ending in about November of 21. These are very clear, very obvious time frames that are the only point of reference thus far for the crypto space to really put into context. So we don't have to go back to this area. We can look to the market that we had in the previous cycle and clearly the development of a significantly more robust market in the most previous cycle. And I find this quite interesting because obviously I posted a bunch of charts on Twitter this morning, so we have a long history. The dollar goes back since its inception. It's been through a couple of iterations and variations over the last 100 years. But the two purple boxes, that's it for the crypto space. And I like looking at this chart for that kind of context. This shit is brand new. It's brand spanking new. So it just lets me know that it's just the future. That's all we have. We don't have a history to look on, but we could really only draw certain conclusions to only the extent of the information that we have. So in countless regards, all we have is the most previous cycle as a point of reference. Everything changed with regard to the dollar pre-08. There was correlation and then inverse correlation, and obviously the dollar fell off a cliff. So 2000 and I guess 02. Let's take a look at the S&P. That's the 10-year. So the S&P started falling over in September of 2000, and the DXY started ripping to the upside. So there's your last thrust. So the dollar capitulated in 98, but so the S&P is much slower. These are bigger entities. The crypto space is probably setting up to be a very fast-moving market that front runs what the larger equity markets do. So as I mentioned, you get that last breath to the upside or the downside after the reversal of the dollar. So look, the dollar reversed in November of 98, and then the S&P didn't roll over until September of 2000. Was that a year and a half? So that's just a wild. That's much longer than the 6 months that we saw in the crypto space. Many folks look to November towards maybe the beginning of December for the last bullish overtones in the crypto space, like Eurodollar started rolling over. But I think this is a great observation. Crypto is faster than equities. The flip in the dollar foreshadows directionality change in asset markets, and depending proportional to the scale, the size of the respective asset market, how long the last breath thrust in a particular directionality has to play out. I'm not going to look at the current state of equities markets. I'm much more interested in the crypto space. So that's where we were summer of 21, our last thrust till November of 21, and we've been bearish ever since. So now what we have is a potential top, and the question becomes confirmation or confluence, continuation to the downside, and that would set the stage for the next bullish market in at least the crypto space. I'm not going to talk to equities at the moment. Here's another observation. If these were basically our crypto bull markets, ICO season, DeFi season, look how small they are with regard to dollar price range. I mean, 88 to 103, give or take. That's the entirety of the crypto bull market. These bearish runs to the downside. It really shows you the power of the dollar in so many regards. These little moves to the downside in dollar strength relative to other sovereign currencies, how much it affects capital inflow and outflow to and from asset markets. Quite fascinating. So take a peek at this. So we got the dollar on the weekly putting in somewhat of a top. Hasn't really tested the TWAP yet. Why don't I have SMAs? Give me a second. Uh, where's my beta? That's the one I like. All right, so it's on the 50. No, that's the 10. Sorry, guys. That's the 10 SMA on the weekly. So it looks to be putting in support on the 10 SMA on the weekly. Let's see how high it goes because let's circle back to the daily chart and you got the TWAP above head. So it found support on the 50 SMA on the daily, and I'm very curious on this daily candle. If it finds resistance at this daily candle, at least it's a continuation of downtrend relative to the most previous backtest of the TWAP on the daily. What I'd like to see from there is a push down and a breach of the 50 SMA to the downside. Anything on the oscillators that might be interesting? It was a relatively large swing to the upside. Nothing on the oscillators that really catches my eye. Um, Not extended to the upside or the downside on the RSI. So what I want to see is the TWAP to hold as resistance. And how far in are we? May of 22 for the reversal. It's literally a month. So we could easily see lackluster crypto markets for the next couple of months. If let's go out to the weekly, if this is any indicator. And what is the indicator? This date range. The date between reversal and November. Let's say November 15th. There we go. Oh, damn it. November 15th. We can change the color. No, let's leave it as blue. Okay, so this is the range of the last breath thrust to the upside. So if we take this and on reversal, it takes that long for the bullish base to set up. You could see we're a fair amount of time. We're 147 days away from potential uh, a potential foundation for continuation to the upside or reversal to the upside for that matter. So that's really what catches my eye right now. If you go back to the daily, I want to see the TWAP hold as resistance. I want to see the 50 SMA fail to the downside, and we want to see the same play out for the 100 SMA, 50 SMA relationship. And then we eventually need to see the TWAP on the weekly break to the downside. If the TWAP to the weekly breaks to the downside, then we're going to see some decent action. What's a little disconcerting is very much this. You guys see what that is? That's a golden cross right there. That's a 50 SMA, 200 SMA bullish cross. So I have absolutely no trust in these markets because these technical indicators are not screaming confluence of a particular direction. In fact, we see the resistance on the daily with the TWAP. We want to see the 50 SMA break to the downside, but until it does, we have a damn golden cross going on the weekly. And it just happened on May 16th. This is fresh. This is brand new, hot off the press type shit. It's a golden cross. So that's very concerning, especially considering we're looking for potential reversal. Um, Other things that catch my fancy are the 10-year, but that's like fuel. fuel to potentially influence monetary policy, and that goes into more of a deeper macro conversation that I want to get into for the stream. I want to talk about the dollar. So obviously for the last couple months I've been talking about various things that put pressure on capital flow. We've been talking about modeling of emerging markets. We've been talking about potential things that will cause Fed capitulation or Fed change of monetary policy positioning and their decision making process. So today's stream, I wanted to shake it up a little bit with literally technical data that could potentially contribute to us taking on a capital gains play. Go figure. I haven't. When's the last time I talked about capital gains? It's got to be like a year or so. Figured I'd shake it up a little bit and give you guys a little bit of hope for some upside bullish price action. Let's see who's in the stream. Let's see if I can help you guys out a little bit today. Topsy's in the house. Yeah, buddy. Ain't nothing but a peanut. As good old Ronnie Coleman used to say. Vasco, hey, no, went up only. Well, I hope I helped a little bit with that. I would say somewhere around October. If any historical precedence is being created, somewhere around October. So if this continues as a reversal and we see continuation to the downside, it'll take a bit of time for the market to actually believe it. I sure as hell know it'll take me a fair amount of time to believe any type of bullishness will set in. And we're talking towards the end of the year. If it follows literally the most previous trend reversal in the dollar. Interesting. Dan's in the house. Big Twat's in the house. Igor, Muhammad. Fly me high. Yo, Noah, no kids, no work, and a Captain Rational live stream. That's a good day. That's a good day right there, my friend. Crypto Play-Doh. Good morning, Noah. Nice to finally catch you live. It's a pleasure to have everyone in the house. We do our best. We're trying to do better here. That's the name of the game. We can do better. Hilda's in the house. How are you? I hope everything's okay. Glad to catch the stream. Live stream today again. Likes given for the algorithm. Texas Eric is in the house. 43 people in the stream. 17 likes. We can do better. SGB USDT. What is SGB? Never heard of it. Let's humor this for a second, fellas. SGB. Never heard of it. Not too much interested in anything I haven't heard of. Happy for folks to trade it because it's eventually going through stablecoins, which produces our much beloved Curve revenue. Oh, this is this? It's just off my radar. What Songbird is Flare's token? It's literally completely off my radar. I know very much about Flare, but I'm not up to speed with what the hell they're working on. Damn, this is a gorgeous website. I have a high opinion of Flare. I need to catch up with what's going on with the ecosystem. That's something I'm going to do on stream. I'm just skimming through their portal for a second. As with any L2, all I'm interested in is cross-chain liquidity, cross-chain volume, and monetary velocity on the network. So, for instance, even though Phantom and Avalanche have gotten hit hard, Aave and clones have produced a significant amount of monetary velocity. Clearly, the velocity that's generated is nothing comparable to that on Ethereum mainnet. And even Ethereum mainnet is relatively small on the macro scale. But what's pertinent is the process of double entry accounting, lending, collateralization, and that is the money creation process. So that's capital expansion. And so that, ladies and gentlemen, is equivalent to stablecoin inflow. So if you have stablecoin inflow combined with Aave going to 20, 30, 40 billion dollar on their presentation, you have capital creation. You have more liquidity in the system, which is going to drive activity throughout the entirety of the market. So that's why I look to the amount of capital that's flowing cross chains, but a good part needs to be capital formation within a particular market, capital expansion as per traditional commercial banking practice. Hope that helps a little bit. So it's on my radar. Flare's been on my radar, but where does Flare fit into my interest? The same as every other L2. And I need to, and I look at it in terms of an emerging market and capital flow between countries, for instance. And we'll see if capital is flowing into a particular L2, a particular market. That's a good thing. That means there's going to be price appreciation, and that means an opportunity is emergent. So always keep an eye on the bridges to see where capital is flowing. Always remember capital flows from underperforming assets to outperforming. So if you got a couple $1 billion flowing in the Phantom, you're probably going to have some appreciation across the board. What else is the dollars going to do other than buy shit? So that's a good way to look at data to see where opportunities may present themselves. Kingmakers in the house, Break Goods Rider, Johannes. Hey, Noah, thanks for your sharing your thoughts. Did he get the OPR job? Yeah, I did. I didn't claim it. Velodrome launching on Optimism today. I'm not up to speed with what's going on Optimism with regard to new stuff, but Synthetics is still on my radar. Synthetics is the original staking protocol of crypto, period. They basically started at the end of 2019. Their SUSD, where you would collateralize SNX to mint a proportional amount of SUSD. It's been lackluster for basically 2020, the end of 2020. DeFi summer was hot with Synthetics. That was the big rip, up to about $7-8. It got up to, I think, to $14 at some point. But it's been lackluster since then, especially as Arbitrum and and the other Alt L1s, Phantom, Avalanche, and Polygon got hot. So Optimism didn't come into fruition until much later. So Optimism's starting to pick up, and that's quite exciting to see. So Synthetics is coming back on the radar, and bear in mind we talk about stablecoins all the time on Ethereum mainnet and the Alt L1s. So SUSD and Synthetics was basically the original collateralized stablecoin. MakerDAO was on the scene. I think they had a single collateralized DAI, not multi-collateralized DAI, and they had STI at the time when Maker started the beginning of DeFi activity. It was SAI, not DAI. So Synthetics has been around since the beginning of DeFi activity. There was nothing else. There was barely any DeFi activity at the time when Synthetics started its staking contracts. And if you didn't know, almost all staking activity across DeFi is a clone of the original Synthetics contract. So Synthetics, the original contract, is responsible for a good part of all staking activity throughout the entirety of the crypto space. So basically, my opinion, Johannes, is that your interest in Optimism, and everyone's interested in Optimism because of maybe the airdrop, because of new protocols coming online, that just reminds me that I need to keep an eye on Synthetics. I'm much more interested in the larger protocols becoming reinvigorated rather than the smaller protocols. And just remember, as always, you go out on the risk curve. If you're the smaller protocol, untested, nobody knows what the hell is going on, you're further out on the risk curve. And a couple of key tweets I've posted of late. Sometimes you make more money taking less risk. Sometimes taking excessive risk, you end up losing money. So most important heading into whatever future cycle, whenever it comes, a future bullish cycle, you must do it different. You must take the good things, the positive learning experiences from the most previous cycles, apply them constructively, and do things differently to avoid the losses that happened in the most previous cycle. And this way, you're taking the best of what you did and you're going to make it better because we can do better. Always. Vasco says, "Don't give us hopium, please. I just recovered mentally from USD." There's plenty of reason to like what we're seeing in the data and the charts. Um, it's not a so my hopium isn't that things are going to start moving up. That's not the way markets work. What I'm hoping to start to see is further. It's not even like we're seeing initial confirmation. This goddamn golden cross has been eating at me. We would have to see invalidation. It would need to fall down. We need to see the dollar fall down to like 98, 97, 96, and invalidate the 50 SMA, 200 SMA bullish cross on the weekly. There's a lot going on in macro. Aside from the war, that's Bancor. Bancor is always on my eye. This damn 10-year yield at 2.933% is absolutely wild, because here on the weekly you have bum 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 golden cross. Now, this is a bit of an extraordinary setup. This is more a fuel, whereas the dollar is kind of like the fire, and then equity markets and crypto markets are kind of like the shit that's affected by the fire, and crypto leads equities, and the dollar and forex markets lead or affected by the debt markets. It's just a really wild system of delayed cause and effect. The causality is wild once you see the correlations and inverse correlations and understand the way the capital flow works. So this shit is wild right now. This thing is ripping on the weekly. Look at that candle, and in this particular position. I mean, this is basically, is that a 50? Yeah, it's a 50 SMA mean regression on the daily for the 10-year. Now, it's not the most wild yields because we've had higher yields, especially historically. If you go to the weekly, I mean, obviously we had massive, massive yields, but it's the positioning relative to trend. Now, that's always a question, like, it's an imaginary line, and symmetrical moving averages and exponential moving averages are just imaginary lines. But the thing is, everyone looks at them. So that's when an imaginary line becomes a bit of a real line. So this is crazy, this chart, because this is a historic resistance flip support, a very historic resistance flip support, to the point where the damn moving average, the 10 SMA, is about to breach historic resistance, historic trend resistance. This didn't happen back here. This didn't happen in November 2018. This didn't happen back here in June of 07. And the last time we were up that high was literally 1984. So 1984, June 07, and 2018. And it broke. That's how slow the bond market moves. That's how big the bond market is relative to these smaller markets. It's very slow moving to potentially see very significant trend directionality changes. Be a secular trend change. And it would change the planet, frankly, if bonds started to have a bearish cycle of higher lows. There it break down, but there it go up. And then you see higher lows. This would be wild. And it would change everything with regard to capital markets around the world, as well as countries and the capacity of countries to service debt. Changes the entire story if we start to see higher lows. And this is indicative of trend continuation. Historic resistance, flip support. Damn, boys and girls, to me, this is a screaming technical indicator. This does not entail confirmation, but this is starting to build confluence of some shit is about to go down in global financial markets that hasn't occurred in almost the last 50 years, at least 41 years, at least, as per the amount of data that's available to TradingView. Now, clearly, we have some sort of macro event and everything goes risk off, and everyone, for some reason, risks off into the same old shit that they always risk off into, and they finance the crap out of government deficit spending, U.S. government deficit spending, yet again, as Peter Schiff says, which I quite like this conversation with Brent Johnson and George Gammon. Why are these countries doing the same old shit over and over again? And Brent's argument is that that's what they do. And Peter's argument is, what the hell is the matter with these people? They're doing the same old horrible strategy, financing U.S. deficit spending over and over and over again, no matter how many times we fuck it up. So, anyway, that was a bit of a digression. But these are the things I'm looking at to try and get a sense of where the hell we are in the market and where the hell things are heading. Don, in the last 3 months, most emerging markets are outperforming the S&P, not on a Forex level. Forex is getting crushed, and I'm not too familiar with emerging market equities. But that's an interesting observation. So, generally speaking, in this market, where the U.S. is getting hurt with regard to productivity, capital flow, monetary velocity is still completely collapsed, but other countries are suffering because of their relative depreciation of their fiat value relative to the dollar. The U.S. is still a massive, massive exporter of commodities and materials, so on and so forth. You'd be surprised. Most people think the U.S. doesn't really produce jack shit anymore, but it's a big, big exporter. You pull it up, you'll see it on Wikipedia. And with the depreciated value of the foreign currency, they're losing purchasing power significantly. So anyway, it's complicated market that'll drive you nuts. Dan, thoughts on Unami and their upcoming USDC faults? Not on my radar at all at the moment. Dave, what presentation are you referring to for Aave getting 20 to 40 billion? If you go to Aave.com, they show you their total on the main screen, 15 billion. Bear in mind, this is double entry accounting, which really is quite interesting. So this is a combination of both deposits and lending, which is total amount of capital as per double entry accounting. So I find this very fascinating. As this goes up, there's more capital in the system to flow. More cash flow, more capital to buy stuff, capital expansion as per historic commercial banking practice. So this is quite interesting. I like to look at this every now and then. Aave is a ridiculous protocol. I don't think it's a good investment at all. Their tokenomics don't make it a favorable part of the portfolio. And depending on your portfolio size, maybe you're a billionaire and you got an extra couple $1,000,000 and you buy some Aave because you want to own governance rights. But I don't know. I'm a relatively small fish compared to a billionaire. I'm not too interested in governance rights. I'm much more interested in just freaking cash flow. So it's not on my radar at all in that regard. Figured that it's worth mentioning. Steeler Nation, if you see the dollar start going down, will potential make some capital gains plays? No, it doesn't indicate that because of the lag time. So, no, that's ES. Let's go to the dollar. There's a lag time between dollar reversal and potential market actors finding enough comfort to start throwing around capital. So, as I mentioned here, the dollar bottomed, DXY bottomed on May of 21. And the market ran until November of 21, if you recall. And that's when the euro dollar futures started to invert. That's when we started to get bond yield curve inversions and the dollar just kept on ripping, and we obviously had our depreciative market activity until the dollar topped and we finally start to have some stability. You've seen it in the prices the last couple of days and week or two where it's not just going straight down anymore, and that is very much inversely correlated to the DXY. But not down is also not bullish. Remember what I always say, support is not bullish. Support is weakness. Strength is resistance flip support. So what we want to see is not weakness. in the dollar chart, we want to see bearishness, which is a support flipped resistance. And we want to see that obviously in the crypto asset charts as well. But what we really want to see is a couple more months of bearish continuation of the dollar. Maybe this goes out to about here, about 100 over the next 2, 3, 4 months, and we can start to see a strong foundation get established such that the crypto space can actually have a nice bullish thrust to the upside. Whether it breaks to higher high, who knows? Or it's just a bear market rally and you get to some nice number, 50, 55,000 on Bitcoin and doesn't breach all-time high. I don't know. That's a whole got to wait and see how the markets play out type thing. But what's most interesting is that we see very clearly the inverse correlation between dollar topping and uh, risk markets not going frickin' straight down. So keep a careful consideration of the last breath to the downside. This was the last breath to the upside. We might see another push down, but if we start to see a continuation of the dollar to the downside, this is how bottoms are formed, especially if we're looking at the crypto markets as an emerging market and capital flowing into and out of emerging markets. We'll take a look at stablecoin issuance and redemption patterns. If we start to see, oh, the Tether printer is printing, that's because capital is flowing into the crypto space, and that means we're going to start to see a bottom forming and appreciation starting again. We'll start to be able to take advantage of capital gains plays, and at that point, you probably want to front run a little bit of the cash flow positions, our famous CDX and CRV type positions. Because those aren't capital gains plays. You just want the cheapest price possible on that type stuff. Mark, Johannes, thank you. SUSD, 280% APR on Curve and Optimism, but I think it got juiced up temporarily in the last 24 hours due to OP airdrop and peak in trading. Yeah, but it's been printing that for a long time now. Obviously, it's been quite depreciated, given that Optimism has been off the radar of the DeFi space very much up until recently. So that's why it's always been on my radar, because as optimism starts to grow some legs, it could potentially find reinvigoration. Any thoughts on VE Bow? Yeah, it's pretty cool. I like Balancer. Balancer. So, how would I classify Balancer? Maybe a little bit of a weaker Beethoven? Beethoven grew some legs for a while. That showed some strength. So, what are they? They're basically federated protocols, much like Curve built and is the strongest overwhelmingly in the overall crypto space. So Bao is pushing for that. Beethoven had that for a bit. Phantom got completely annihilated. So these are things that, in my mind, I classify as I probably should keep an eye on to see how things play out. Hey, Cap, got here late. Any tips on security? One hardware wallet is enough. Yeah, you just need a ledger. Obviously, back up your seed on metal if possible. That is probably preferable. Maybe keep an extra 1 or 2 ledger devices with the same seed phrase on it, so you keep some good backups, put them in secure locations. That's about it. Otherwise, you guys know the deal. I can't stand MetaMask. That's dead. The only thing that makes sense at all to use is Frame. Frame is superior um, software wallet with full ledger support and very convenient Chrome browser plugin for DeFi, and it does everything and anything MetaMask does, except it doesn't suck. So MetaMask is absolute garbage. Bottom line. Tapsy been hopeful waiting on Curve around sub $1. Not sure it'll ever get there, with all the protocols massively buying up supply. Not to mention Frax changes, interesting times. So as much as everyone's interested in the smaller protocols, what's new, they're trying to find the new hot thing, you know, I've been looking at protocols, tempted to buy stuff. I'm always like, come on, Mem and Abra. It's always been interesting, and we've had positions there for a while, and obviously it got completely annihilated. Um, there's a lot of meaningful protocols. Bow. Um, I'm not going to go through the laundry list of shit that catches my fancy, but I guess in conclusion, the end of the stream, I always try and restrain myself and go back to the core positions that have the most meaning, not out on the risk curve. And obviously, all these positions are going to have significant asymmetric appreciation over the coming years. And I don't need to take less risk. And everyone's always trying to take more and more and more risk, whereas you're going to have extreme appreciation of assets not out on the risk curve. I mean, even Bitcoin is likely to run multiples over the coming years. So I think there's an unnecessary urge that people don't restrain them from indulging in going out on the risk curve. People need to refrain from indulging in excessive risk taking. And that's probably one of the biggest things I feel very happy to encourage with the stream. You don't need to go out on the risk curve. What you need to do is factor in much more reasonable time horizons, and you're going to get multiples. I mean, Bitcoin ripped 20x, 20x on the money between March of 2020 and its all-time high. And that's just Bitcoin. 20x. You don't get that for a decade in equities markets. So you don't need to go on the risk curve. You just need to have patience and look for the correlation, inverse correlation in various markets, assess directionality shifts, and protect your capital. Because obviously, if someone bought and started buying in November of 21, that definitely didn't work out so well. So you got to see where we are in the market cycle, and we got to look in on these types of charts that I'm looking at right here. So we see the most previous flip, and we're going to look for the most hopeful upcoming flip back to the upside coming off this depreciative trend direction. Last question. When NEAR brings 20% yield, will money be flowing to NEAR and waves pump? That's a whole lot of speculation out of the risk curve, my friend. But it's interesting. Dig in and just remember rational portfolio allocation, compartmentalization. You got to have your cash, you have your assets, maybe some equities, you have your cash flow assets, and then you have a small part of the portfolio allocated to maximum risk 1%, 2%, 3%. You get 1,000% on 2.5% of the portfolio. You're basically going to change your entire portfolio. You don't need to put 50% of your portfolio and take excessive risk. It's not necessary. 1% goes 10,000%. It changes everything. 10x on 1% of the portfolio becomes 10% of the portfolio. It structurally changes everything. Also, if the dollar depreciates, BTC pumps later to zero. It'll be some L1s. Ethereum killers just like Avalanche. Yeah, I don't know. There's a lot of stuff to that sentence. I'm not a fan of the Ethereum killer phrase. It doesn't mean much to me. Last question, Harshal. Have you looked at VE Multi? Yeah. So that's another one that catches my fancy, and I'm constantly tempted. So it's a very lucrative, very high paying asset, and USDC, no less. But you know what I remind myself of? Stuff like this, like Stargate. This is backed by Stargate, which is backed by Layer Zero. So the potential for seamless cross-chain interoperability, that was my core 2021 narrative heading into 2022, is right here. Now this is obviously a protocol on a protocol on a protocol, but this protocol facilitates seamless cross-chain interoperability. So this protocol can be consumed by a third party because these contracts are accessible. They're accessible to this user interface. That means they're accessible to other contracts, which means you could easily transfer Ethereum to any chain. You could easily transfer Ethereum to another chain and swap it to another asset seamlessly. You don't even have to know what the hell's going on behind the scenes. It's basically a toolkit. This is a Lego. This is modularizable and consumable by another protocol. This is big stuff. This is probably one of the most interesting protocols that most people don't talk about, in my opinion, because you could also provide liquidity to it to the tune of 31% on what the heck is that? Is that hash? They have their own token. But look, stablecoins, 47%, 27%. I don't know, with this OUSD. I'm much more interested in maybe this, but this thing is full. So it's a relatively new setup. We'll see how pools these pools emerge or evolve over time, how they iterate. But functionally, this works great. This is a great way to trade from one chain to another. And this has nothing to do with multi-chain that has um, centralized LPs, liquidity. This is literally trading from one asset on one chain using messaging to exchange it on another chain using the LPs from Stargate and these LPs that are here. It's a very interesting protocol. And I mentioned this because I don't necessarily want to lock into multi. You know, I liked it. I still like it, but I don't know where it lands in the grand scheme of things as compared to cross-chain messaging protocols. Multi-chain has cross-chain messaging, but multi-chain historically is not, it has its own liquidity. It's not using the liquidity on various chains and facilitating the exchange using cross-chain messaging. Not familiar with Velodrome. Have you looked at the multi Stargate community? Call on right now too. So yeah, they're still on my radar. I don't think it's a good investment from a token perspective. They still need to iterate on their tokenomics, which I haven't really heard anything about, and no one's really asked me to give some feedback. I said I'd give some help, but I just don't have much time and I haven't done anything yet. Uh, I'm looking forward to seeing where Stargate goes, and even more so, Layer Zero. Let's. It's enough for now. It's all good. I wish you guys a good week. Don't get too exuberant. Don't get too excited about the market. Stay rational. Stay restrained. Stay protective of your capital. Don't over deploy it. Maybe not even deploy at all. But always look for an opportunity to increase exposure to curve, and maybe not even convex, maybe just curve, or maybe a wrapped curve. I guess that's a CVXCRV. It remains liquid. Was SDCRV, and the other derivatives. MCRV is interesting from Abracadabra. There's a lot of interesting stuff going on with the derivatives, and I'm very interested in what the heck Frax is proposing to do. That could be a massive, massive deal. Wednesday, June 1st at 12:18 p.m. As always, I thank everyone for joining. I wish you all a wonderful day. Today is Wednesday. I will see you again on Friday. Tell everyone to subscribe. After party on Discord for the most rational community in the entire crypto space. Love all you guys in there. If anyone needs me, noahseidman.com. Happy for a little one-on-one time. I will see you next time. Peace.